Hi guys, so bit of a roller coaster night overnight as we had the US inflation numbers come in a little better than expected, and well, under that, which is a good thing, right? So that's good news, even though it's red, because that would suggest that inflation is going down, and so it would suggest interest rates also going to not be raised in a couple of weeks. So that's interest rates going down because inflation is under control. But then the BOC didn't move rates, but then we had the Fed minutes come out, and that was all very hawkish, saying that the battle isn't won. And there's a couple of talking heads as well, Barkin and a few others, all having fun and games with their hawkish commentary. So that suggested interest rates go up, and it was pretty volatile. We're going to have a look at bonds. We can see here on the 5-minute chart that it tanked on so interest rates lower on the inflation numbers, then it started to climb back up throughout the day, only to get the FOMC minutes, and then faded off that. So that was all fun and games. The dollar index itself tanked on the inflation and then didn't look back. You can see back in this downtrend, tanked on the inflation numbers and then just pretty much traded sideways and ignored the FOMC. Whereas stocks was a lot more extreme, where we can see, hey, everything's good, party, interest rates are coming down, so yeah, let's start buying stocks. And then that faded, tried to rally back, and then the hawkish commentary and the FOMC minutes pushed it down to the lows. So closing on the lows is quite a bearish signal. And the FOMC minutes said that we will be going, the US will have a recession later this year, but they see it as mild. But that's obviously not a great thing, particularly for stocks. It was even more pronounced in gold, not knowing which way to go. As we can see, it initially rallied on the inflation numbers, and then tanked and spiked a little bit on the FOMC, but it's certainly a roller coaster fun ride for those of you who little gold bugs try and trade that beast. But oil also up, sort of broke through this resistance overnight. And I'd say that's on the back of recessionary fears, which is kind of counterintuitive, but that's where we're at. So looking at Aussie dollar, only strengthening thanks to the weakness in the US dollar, really. If we're going to have a look at the Aussie against all its peers, you can see pretty much sideways against the yen, up a little against the CAD, sideways against the Kiwi, and not much happening against the pound. So I see that move over here against the US dollar is more about the US dollar rather than the Aussie dollar. So there's a bit of strength there, but I still don't see any reason to be buying the Aussie, although the commodity index here in Bloomberg is pretty strong, and that's on the back of oil, I would say. Copper is just not really going anywhere. But if we're going into a global recession, then you'd expect commodities to weaken. So don't get overly bullish. Aussie Euro back up and testing that 110 level, 101.30. That's that previous high there is 10.30, or 10.30, and it should be looking at that soon, and I've probably faded off that level, maybe even faded off the 110, because it looks like it's overdone on the daily, the 1 hour, and certainly on the 4 hour. And Villeroy, which is the French finance minister, came out and said there's more to do to battle inflation over there. The cable had a bit of a pullback, is now going to see if it can put in a new high. Don't really see the reason for it, but technically that's what it's looking to do. And the yen, dollar yen, we know the BOJ want it weaker, but with safe haven flows they struggle to maintain that, and that looks just a little too messy for me to get involved. And that's about it. I shall see you tomorrow.